LGPS Scheme Essentials. My name is Andrea Reynolds, and I'm part of the engagement team here at Local Pensions Partnership Administration. As a bit of background, LPPA are the administrators for your local government pension scheme membership, and we carry out the administration on behalf of several different local government pension funds up and down the country. Ultimately, we are responsible for ensuring your pension record is kept up to date at every stage of your membership, and this begins from the moment you join the scheme. LPPA are also responsible for calculating your benefits when you retire or if you defer your benefits to move to a different employer, for example. The purpose of this presentation is to provide you with an overview of the local government pension scheme and provide you with an understanding of the benefits you will be entitled to as a new member of the scheme. Should you find you have any questions after watching this presentation, please feel free to contact LPPA and we will be happy to answer those for you. Details of how to get in contact will be provided at the end of the presentation. Let's look at the key points that will be covered by this session. Firstly, we will look at the reasons to pay into a work-based pension and the key benefits the local government pension scheme provides. The LGPS has many built-in benefits. It's not just a pension for yourself that you are paying for with your monthly contributions. You may be wondering how much it will cost to be part of the scheme, and I will answer this question when we look at the scheme contribution rates. I will then explain what you need to do if you're interested in joining the scheme and where you can find further information should you have any questions after watching this presentation. I will provide you with an introduction to the My Pension Online member portal. My Pension Online is the online service we offer enabling you to view your benefits, run retirement projections and to update your personal details instantly online. Please note, unfortunately, this service is not currently available for our newer members. I will provide a breakdown of how we calculate your pension and cover the contribution flexibility afforded by the scheme. The next section of the presentation will cover retirement and your conversion options. Your conversion options are basically your flexibility at retirement to access part of your pension as a tax-free lump sum to best suit your own needs. I will cover retirement ages and explain at what point you can access your pension and what happens to your pension if you decide to leave before you reach your pensionable age. The LGPS has other built-in benefits such as life cover and ill health cover. It's not just a pension for yourself that you are paying for with your monthly contributions. There are other benefits in the scheme designed to protect you and your family, and we will cover these in the later slides. And finally, I will provide you with the contact details for any follow-on questions you may have after watching this presentation. The local government pension scheme is an occupational defined benefit pension scheme which will be paid to you in addition to your state pension. Your state pension is a benefit which you become entitled to by paying your national insurance contributions, and it is calculated based on how many years you have been making those contributions through your national insurance. Currently, the state pension is around £175 per week and will begin to be paid to you between the ages of 65 and 68, depending on your date of birth, and is payable for life. You might be thinking £175 per week is considerably lower than your current salary, but by joining the local government pension scheme, this gives you an opportunity to increase your retirement income to provide for a more comfortable retirement. The contributions you make attract tax relief, and therefore tax is deducted after your pension contributions have been taken from your pay, meaning you pay less tax. And your employer contributes to the scheme too. The local government pension scheme is a guaranteed comprehensive package of benefits which is backed by law. The scheme also has provision for dependents' pensions for your surviving spouse, civil partner or eligible cohabiting partner and eligible children, so you know your family will be provided for in the event of your death. Should the worst happen, there is death in service cover included as part of the benefits of being a member of the scheme, and this provides a lump sum death benefit equal to 3 times your final annual pensionable pay should you die while still in employment. You can nominate who you would like to receive this payment by logging on to My Pension Online and completing the nomination section there. Benefits can be paid early under certain criteria too, such as ill health. The LGPS pension scheme provides an inflation-proof pension, meaning it's increased each year in line with inflation, so it keeps its value. So, for example, if it will pay for a loaf of bread in today's money, then it will pay for a loaf of bread when you retire too. The scheme offers contribution flexibility, allowing you the option to pay more or less into the fund to suit your own situation and affordability. And finally, as part of your membership, you will have access to the My Pension Online member portal. Before we start to further explore the benefits of the scheme, I would like to provide an overview of the My Pensions Online member portal. My Pension Online provides you with a secure way to view and update your pension record online. So if you move house or change your phone number, those details can be updated instantly online. It provides you with a way to produce your own pension retirement calculations using the built-in retirement calculator. This allows you to input a potential date of leaving in the future, and it will provide you with an indication of what your potential retirement pension may be worth. This makes for a very useful retirement planning tool. And finally, My Pension Online is also a way to nominate a loved one to receive your death grant should you die in service. You can access My Pension Online through our website at www.lppapensions.co.uk. LPPA do try wherever possible to provide a paperless service, and as part of this you will use My Pension Online to view your annual benefit statements. Each year we calculate an annual benefit statement for you, and this provides an up-to-date value of your pension, but it will also include a forecast of your pension to your normal pension age, and this can provide an idea of what you could expect to receive at retirement. It's really important you sign up to access My Pension Online to ensure you're not missing out on receiving important information about your pension. If you're already a member of the scheme and have not signed up to this service, details of how to access My Pension Online can be found on our website. So what will it cost? The only cost to being a member of this scheme is your monthly pension contribution, which is deducted from your pay. Your contribution rate is calculated based on your full-time salary, and this also applies to part-time workers too. The table shows the different salary bands and the percentage contribution rate that would apply depending on your earnings. So we can see from this table anything up to and including £14,600 would mean your contribution rate would be 5.5%, and this will be deducted from your pay automatically by your employer. As you progress through your career and your earnings increase, you will potentially move through the different bands, and your contribution rate will also incrementally increase. Your employer will reassess your contribution rate each April to ensure you're paying the correct amount. The contributions you pay do attract tax relief, and we will look at that on the next slide. And it should be noted your employer does also make a significant contribution into the fund too. So let's look at how much it will actually cost to be a member of the scheme. As I mentioned, your pension contributions attract tax relief, meaning they are taken from your pay before tax is deducted. Let's look at the true cost by working through these two examples. Based on a salary of £18,000, the contribution rate for this member would be 5.8%. The example on the left shows a monthly salary of £1,500 and a tax deduction of £90.50. Once national insurance has been deducted, the net pay for this person is £1,325.18. Now, the example on the right shows the same monthly salary, but this person is a member of the pension scheme, paying £87 worth of pension contributions. However, the tax they pay is only £73.10. So after national insurance has been deducted, their net pay is £1,255.58. As you can see, the actual cost of the pension is not the £87 you would first think, and it's only £69.60 per month, which equates to 4.6%, much less costly than it first appears. As a newly appointed local government employee, you will automatically join the local government pension scheme, and this is known as auto-enrolment. So what do you need to do now? To enable LPPA to create your pension record, you're going to need to complete a starter form, which will be made available to you by your employer, or you can use the enrolment form found on our website. The starter form is also your opportunity to tell us about any previous pensions you may already have elsewhere, and it gives you the chance to request a quotation of what those benefits would be worth if you transferred them into the local government pension scheme. You have a 12-month window to request a transfer in of previous pension benefits. After this time, it will require approval by the fund before the transfer can be considered. So the priority at this point is to ensure that you provide the information on your enrolment form so it doesn't get missed and you don't miss the 12-month transfer window. I should point out you do have the option to opt out of the scheme. However, if you are considering opting out, we would strongly recommend you seek independent financial advice before doing so. Should you elect to opt out, please be aware, as part of a government initiative to encourage employees to contribute to a pension, you will be auto-enrolled back into the scheme every 3 years. You can also choose to opt back in at any time by completing an opt-in form, which is available on our website under the Joining the Scheme section. Once you have completed and submitted your enrolment form, after a period of around 6 to 8 weeks, you should find you are able to log into the My Pension Online service and start to view your record. The new Starter section of the website also has a link to the 50/50 option. The 50/50 section of the scheme is part of the contribution flexibility I mentioned earlier in the presentation. The 50/50 section offers you the option to pay lower contributions for a short time if you are perhaps struggling with affordability. When you first join the scheme, you will contribute to the main section of the scheme, and during this time you will build up full pension. If you elect to move to the 50/50 section of the scheme, you will then pay half your normal contributions, but you will only be building up half the normal pension. However, regardless of which section you are in, you will continue to qualify for full life assurance cover as you are remaining an active member in the scheme. As I have already mentioned, a death grant is payable for your loved ones should anything happen to you as an active member of the scheme, and this payment is equivalent to 3 times your salary. You can nominate who you wish to receive this benefit, and this can be done via My Pension Online when you initially set up your login, and can also be updated at any time in the future should your circumstances change throughout your career. Let's now take a look at how your benefits are calculated. If you're an existing member of the LGPS, the first thing to consider is the date you joined the scheme. This information is key as there were some significant changes made to the scheme back in April 2014. In April 2014, the local government pension scheme changed from a final salary scheme to a career average revalued earnings scheme known as a CARE scheme. So from the 1st of April 2014 onwards, benefits built up in the LGPS are calculated under the rules of the CARE scheme, with any membership built up before April 2014 falling under the final salary benefit regulations. Final salary benefits are calculated using your full-time equivalent final 365 days of pensionable pay, the appropriate accrual rate, and your service in years and days. So whatever your full-time equivalent rate of pay is in your final year before you retire, this is usually the pay figure we will use when calculating your final salary benefits. To clarify, the accrual rate is simply the rate at which your benefits build up in the scheme. The care benefits, however, are calculated differently. Under the care scheme, your pension benefits build up as an average of the pay that you have received throughout your career. The more you earn, the more your pension builds up to provide you with a guaranteed income on retirement, and this is payable every year for the rest of your life. And finally, also included in your pension calculation is any transferred in membership you have brought into the scheme from elsewhere. As you can see on the slide, once added together, this produces your total pension benefits. The local government pension provides an inflation-proof pension, meaning this is increased each year in line with inflation, so it keeps its value. Let's take a closer look at the final salary benefits within the scheme. For each year of membership built up to the 31st of March 2008, you receive a pension of 1/80th of your full-time equivalent final pay, plus an automatic lump sum of 3 times your pension. For membership built up between the 1st of April 2008 and the 31st of March 2014, you will receive a pension of 1/60th of your full-time equivalent final pay. Looking at this example, we can see in the box on the right that this member has built up 5 years service under the 80th accrual rate and 6 years under the 60th accrual rate. Using a final salary of £20,000, this has provided them with a total annual pension of £3,250 per year, increased each year in line with inflation and payable for the rest of their life. Let's now look at how your benefits build up in the care scheme. As I mentioned, from April 2014, the LGPS changed to a career average revalued earnings scheme known as a care scheme, meaning your pension now builds up as an average of the pay that you've received throughout your career. For each year you work, we look at how much pensionable earnings you have received and take that figure and divide that by 49, and this is the accrual rate of the scheme. If we use the example on the slide, based on earnings of £25,000 divided by 49, this would purchase an annual pension of £510.20. Each year the same process happens, so again, using the same example, after a second year of contributions into the scheme, another £510.20 of annual pension would have been purchased, and this is added to the existing £510.20 from the previous year. Each year the pension that has been built up is also increased with inflation. As you can see, the more you earn, the more your pension builds up to provide you with a guaranteed income on retirement, and this is payable every year for the rest of your life. At retirement, you have the option to take a reduced annual pension in exchange for a one-off tax-free lump sum if you feel this would better suit your own needs. You have the option to convert or exchange a maximum of 25% of your annual pension to provide a tax-free lump sum. So for every £1 of pension you give up, you would receive £12 of lump sum. As I mentioned, one function of the My Pension Online member portal is the built-in retirement calculator. This allows you to input a potential date of leaving in the future, and it will provide you with an indication of what your potential retirement pension may be worth. And this makes for an excellent retirement planning tool. In addition to providing estimated pension figures, the My Pension Online member portal also allows you to adjust these figures in line with the conversion options mentioned. You are therefore able to look at the impact on your own pension figures should you decide to opt for a larger lump sum by using the sliding scale. In this example, the member has chosen to convert up to the maximum 25% to provide a larger lump sum of £91,590.96 and a reduced annual pension of £13,738.65. Whatever you decide, your pension is taxable in the same way your salary is now, and every April your pension will be increased in line with inflation. As well as transferring in existing pensions from elsewhere, you also have the option to increase your retirement benefits in other ways. As a member of the LGPS, you have access to two tax-efficient ways of increasing your pension benefits in addition to the benefits you are already building up. These are additional pension contributions, known as APCs, which are a way of buying extra pension directly into the LGPS itself. And the other option is through additional voluntary contributions, known as AVCs. This allows you to build up a pot of money with the third-party provider, such as Prudential, which is then used to provide benefits in addition to those provided by the local government pension scheme once you retire. Further information on both the APC and AVC options can be found in the Increasing Benefits section of our website. Let's take a closer look at the APC option. The additional pension contributions, known as an APC, are your way to purchase extra LGPS pension. The contributions you make attract tax relief up to 100% of your taxable earnings. You can choose to pay for the extra pension by spreading the payments over a number of complete years or by paying a one-off lump sum. If you are in the main section of the LGPS, you can pay additional contributions to buy up to a maximum of £7,316 of extra pension. Please note you are not able to elect to buy extra pension through an APC if you are in the 50/50 section of the scheme. And as such, any active APC contract would cease if you subsequently move to the 50/50 section of the scheme at a later date. Should you wish to set up an APC, please visit the Increasing Benefits section of our website for further information. Another option are additional voluntary contributions, known as AVCs. These are provided by a third-party AVC provider, and a full list of providers for each fund can be found on our website. An AVC allows you to build up a pot of money which can be later used to increase the amount of tax-free cash you receive at retirement or to be used to purchase additional pension. You can pay up to 100% of your pensionable pay into an in-house AVC, and as the contributions are deducted directly from your pay before the tax is worked out, you receive tax relief automatically. Your AVC contributions are invested by the AVC provider in line with your instructions, and you therefore decide how the money in your pot is to be invested. When the time comes and you retire, your AVCs must be paid at the same time as your LGPS pension. The disinvestment of an AVC does add an extra step in the retirement process, and this is something to be aware of if you have an AVC and are approaching retirement. Should you wish to set up an AVC, please visit the Increasing Benefits section of our website for more information. Let's now take a look at the retirement process. As I mentioned earlier, My Pension Online has a built-in online calculator, and this is a great place to start when you are considering retirement. Obtaining estimates will help you establish the approximate value of your annual pension to any potential retirement dates you may have in mind. If you are a newer member or don't have access to My Pension Online, you can request pension projections by using the member contact form on our website. Having an understanding of your potential retirement benefits can assist with your decision-making process and aid with your financial planning for the future. Once you have made the decision to retire and chosen a date, you will be required to provide written notice to your employer in line with your contract. However, the retirement process has many steps which must all be completed before your pension or any lump sum can be paid. With this in mind, we do ask that you provide your employer with as much notice as possible. This can help to reduce delays and make for a smoother retirement journey. Once you have agreed the date with your employer, they will advise LPPA of your intention to retire, and we will then provide you with a retirement pack which contains a pensions estimate to your date of leaving. Included with these figures are your conversion options, giving you the option to convert or exchange some of your pension to provide a larger lump sum if you feel that this will best suit your own needs. Please complete and return the paperwork together with any requested certificates as soon as you can. This will allow time for your benefits to be processed in line with your instructions. Once processed, they will then be ready to pay as soon as possible after you leave. Pension payments are typically paid on the last working day of the month. However, lump sums can be paid earlier as these are made by backs and have multiple payment dates across a month. Confirmation of your pension payment date will be made once you retire by letter. Should you have an AVC, or for those considering taking out an AVC before retirement, please be aware that an AVC may delay payment of your pension by up to 2 months due to the extra steps involved. If you want to know more about the retirement process, please visit the retirement page on the LPPA Pensions website, which will provide you with a walk through the process. So what are the different ways you can retire from the scheme? You can choose to retire and take your pension at any time from age 55, provided you have met the 2-year vesting period in the scheme. If you choose to take your pension before your normal pension age, it will normally be reduced. However, if you take it later than your normal pension age, it will be increased because you are claiming it later. Whatever you decide, please note you must take your LGPS benefits before your 75th birthday. Your LGPS pension is payable in full from your normal pension age, which is linked to your state pension age. This is classed as normal retirement and is the point that no reductions will be applied to your care benefits. Leaving after the age of 65 will also attract enhancements to any final salary benefits you may have in the scheme. Early voluntary retirement allows you to access your pension from age 55. No employer consent is required for this type of retirement. However, your benefits may be reduced as you are taking them early and you will potentially be receiving that income for a longer period of time. Flexible retirement is worth considering if you would like a more gradual move into retirement. From age 55, if you reduce your hours or move to a less senior position again, providing you have met the 2-year vesting period and your employer agrees, you can take some or all of the pension benefits you have built up, helping you to ease into retirement. Each employer has their own individual policy on flexible retirement, so you do need to liaise with your employer if you are interested. As your employment is continuing, you would be eligible to rejoin the LGPS on your reduced hours or grade and build up further benefits which you would then claim when you retire from your post. If you take your pension after your normal pension age, this is classed as late retirement, and as such your benefits will be paid at an increased rate to reflect this late payment. Another potential scenario is a redundancy or efficiency retirement. Should your employment be terminated for either of these reasons, provided you are aged 55 or over, and again you meet the 2-year vesting period, your main benefits are payable immediately without any early retirement reductions. The local government pension scheme has the provision to pay an ill health pension, and this is known as ill health retirement. In order to be granted an ill health pension, a formal process must be followed. Firstly, the severity of your illness and the effects this has on your ability to work both now and in the future would be assessed by an independent registered medical practitioner appointed by your employer. If approved, this would then be used to determine the level of benefit awarded. There are 3 different tiers which can be awarded for an ill health retirement. You could be awarded a Tier 1 benefit if you are unlikely to be capable of gainful employment before your normal pension age. The ill health benefits awarded under a Tier 1 are based on the pension you have already built up in your pension account at your date of leaving the scheme, plus the pension you would have built up had you been in the main section of the scheme until you reach your normal pension age. The second option would be a Tier 2 pension. If you are unlikely to be capable of gainful employment within 3 years of leaving, but are likely to be capable of undertaking such employment before your normal pension age, a Tier 2 benefit could be awarded. The ill health benefits payable under a Tier 2 are based on the pension you have already built up in your pension account at your date of leaving the scheme, plus 25% of the pension you would have built up had you been in the main section of the scheme until you reached your normal pension age. And finally, you could be awarded a Tier 3 benefit if you are likely to be capable of gainful employment within 3 years of leaving or before your normal pension age if this is earlier. The ill health benefits awarded under a Tier 3 are based on the pension you have already built up in your pension account at leaving, and these payments will be stopped after 3 years or earlier if you are in gainful employment or become capable of such employment. If the payment is stopped, it will normally become payable again from your normal pension age, but there are provisions to allow for it to be paid earlier. Any applications for ill health retirement need to go through your employer, and then there is a process that your employer needs to follow. More information can be found on the ill health page of the website. As we have seen, the scheme offers many other benefits in addition to providing a pension at retirement. The death benefits offered by the scheme offer peace of mind in the knowledge your loved ones are provided for in the event of your death. Entitlement to death benefits start from the day you join the scheme. There are 2 elements to your death benefits, and these are designed to cover you as an individual. As an active member of the scheme, the death in service benefit would be paid as a lump sum death grant equal to 3 times your pensionable salary. When you become a pensioner, although your pension is payable for life, it does also offer a 10-year guarantee. This basically means should you die within the first 10 years of receiving your pension, the balance of those 10 years worth of pension would become payable as a death grant. After the 10-year period, no death grant would be payable in the event of your death. However, there would still be provision for dependents' benefits subject to meeting the necessary criteria. It is important that you nominate who you wish to receive any potential death grant, and this could be a partner, brother or sister, a parent or a child, or even a charity of your choice, and this can be done via My Pension Online and amended at any future date should your circumstances change. In addition to a death grant, survivors' pensions may also be payable to a widow or widower, civil partner, eligible cohabiting partner, or to dependent children subject to them meeting the necessary criteria. If you leave the scheme before reaching retirement, and this could be by resigning from your post or by opting out of the scheme, providing you have met the 2-year vesting period, then you would become a deferred member. A deferred member is someone who has benefits in the pension scheme but is no longer paying contributions into that scheme. If you later recommence in local government employment, you can restart your contributions into the scheme at that time. You have the option to access your deferred benefits at any point from age 55, but they must be paid to you before you reach age 75. Please be aware reductions may apply if you choose to take your benefits early. You can apply for your deferred benefits to be released early on ill health or compassionate grounds, subject to meeting the necessary criteria and with the approval of your former employer. You do have the option to transfer your deferred benefits to a new pension provider should you wish. Your deferred benefits still include life cover and financial protection for your family. However, the amount payable will depend on when you left the scheme. It should also be noted each year your deferred benefits are increased in line with inflation to ensure it keeps its value. We have now reached the end of the presentation. Lots more information is available on our website at www.lppapensions.co.uk. This is also the place to sign up to the My Pension online service that I have mentioned. Should you have any questions, we ask that you use the Contact Us form available on the website and a member of the team will get back to you.